Great stuff. Right. My name is Mrs. Money, and I welcome you into this meeting again. We are going to be diving into a very important aspect of our trading, which is what to actually look for when trading crash and boom. Right now, we have Crash 500. It's running on the Mrs. Money's indicators and strategy here, like the one I taught you before. That's when you are in, when you are in a trade, you always check from your bigger time frames. Your bigger time frames will tell you that this asset is on a downtrend. This was consolidation. This is a retracement or a pullback, and then the trend is going on to a downtrend again. Let's see what the end is about. I saw someone raising their hands. Please, okay, just write on chat if you've got anything. Maybe you're not hearing me. Maybe my volume is too low. Maybe you're not clear of anything. Just write it on chat. I will pause and I will check on the chats. But please, let's have everyone muted, okay? So that we will be able to progress very well. I recognize the house has got 14 participants, including myself. So we're going to go straight ahead and delve on today's topic. I will not be using a lot of indicators today. So let's quickly go on the charts and do our naked chart. Okay, now we have our naked charts on Crash 500. What I'm intending for us to have in this 30 minutes is to actually look at the market structure. When we talk of the market structure, we are talking about the movement and the turning points of the markets, where the market actually turns and where it makes a move down and where it makes a move up. Okay, right. So what we have here is Crash 500. We will just focus on this one assets, and then if time permits, we'll go to the other assets as well. But this is how I want you to approach your charts going forward. I see there's people who are struggling, so I wanted to make this session a simplified version of trading crash and boom. All right, now what you do is zoom out. Now, when you zoom out on these charts, you can clearly see the areas of high resistance and the areas of of lowest support. I want you to appreciate this movement of Forex. I hope this is going to be clear when we put this indicator. Okay, now this indicator is actually showing us the movement, the Forex movements, where we've got a trend going up, and then we've got a reversal here, because now this trend is now going to be a downtrend all this way down. Now, what I want you to appreciate in these movements is that Forex movements, they always move in zigzag. That's why this indicator is called zigzag. What it does is that it shows you a trend. When a trend is forming, let's all do that. Let's all do that. I will move with the cursor. I won't draw anything because I don't want to waste the time. But when you look at this, let's focus on this section here. When you look at the movement here, it started here on the low and it rallied up, and then there was a pullback, and then a higher high was formed. Okay, this would be your low, this would be your high, this would be your lower high, your high, your higher low, and this would be your higher high. Then you've got this higher low again forming, and a higher high forming. So as long as the lows are not breaking the previous low, we are trending up. I'm talking about market structure today, how the market actually moves, how you need to appreciate the movement of crash and boom as well as a trader. So we see this uptrend going up until this higher, this high. Okay, this is the highest high. In this high, we find that the price starts dropping. This is the first lower low, and then, but it's still higher than the previous low. Up until now, this low is lower than the previous low. Maybe let me just put a line there. This low here was broken. So when this low is broken, then it means we are now in a downtrend. So how do you realize that the trend has changed? When you find that the lows are now getting lower. Here we were having higher lows. This low is higher than this one. This low is higher than this one. So this is an uptrend. But now we are finding that now the low was here. Now the lower is getting lower. So this is a lower low. And the lows, it's a lower low, lower low. And so you appreciate the movement of this assets, that it does also, it also obeys the movement of Forex in general. We call it Forex as much as different assets, but we call it Forex markets normally. So please understand what I mean when I say it obeys the Forex movements. So now what I want to show you in this video today, let's do away with the zigzag. Right. Okay, what I want you to appreciate today on how to actually trade. I said you come in and then you zoom out your charts. You can even put them on the, oh, okay, that's not the right thing. Yeah, this is the one I'm looking for. On the line charts, much as my line chart is not very bright, but if you've got a line chart, it's always easier to draw your highs and lows. Now, this is what I want you to do. What is happening? My screen just became blank, guys. I think I pressed something. This is not it. Okay, I hope I'm back sharing. Okay, right. This is how I want you to draw your supports, and resistance. This is a 1 hour chart, by the way. How you draw your support and resistance, you look for price like this, where price went high and rejected very strong, rejected very strong. So this is a very strong resistance. Okay. In other words, I'm saying when you draw your resistance, make sure that you use strong areas. I find this easier. You can do it. If you don't find it easier, you can just not do it. Remember, crash will always crash at resistance. So drawing your support and resistance is very important. But also you cannot litter the whole charts with these lines. Better if you just minimize and stick to the very close to price. Okay. This is support. Okay, right. Now you have drawn these lines. What you are going to be doing with these lines, let's bring back our candles. What you are going to be doing with these lines is to use them for price. When price starts getting into these areas, for instance, now price is almost getting into this area, it rejected from this area with a buy. But right now we are waiting for a sell to continue. Like this pin bar on a 1 hour time frame is a very strong signal for us to enter a sell. And there's a difference. Let me zoom in here. There is a difference. The pin bars are not always the same. Okay, I will tell you now which pin bars are important. The pin bars that are important are the ones that just now we've had a crash. The pin bars which are important are the ones that are on the lines of resistance. For instance, you first draw the lines of resistance, and afterwards you go back to your candles and you observe how they closed. For instance, let's take the case of this pin bar here. I'll call it pin bar for the sake of being relevant. We know they've got special names. This pin bar here, it closed below. It closed below. Oh my God, my computer. Okay, it closed below the resistance here. Because it closed below the resistance, it's showing you interest of the sellers that it's going to go down further. Now this, what's the time now? It's 7:26. This is a very strong support. You can see that. Price has already hit here before and it reversed up. Now what we are expecting in this price is for two things to happen. I want you to appreciate that as well. Let me see if I can be able to draw an arrow. Two things to happen. Either the price from here is going to go up, or the price from here is going to go down. That is what Mrs. Money cannot decide. Mrs. Money cannot be able to decide whether the price is going to break support or whether the price is going to bounce off support, okay? But generally, you look at the trend and the trend is a downtrend. So what we are expecting, like for instance, say this was not the case, this was the case. You see price came to this line of support and it bounced up. And then it crashed again and it bounced back up. Crashed again. What is important is where the price closes. If this price here, for instance, look at this here, same thing was happening on this support line. This was support at first. So this pin bar closed above the line of support, and it opened and it went up. The candle went up, but when it was here, it met this resistance here. That's where you find Mr. Timothy. I'm quoting him because he's so much helpful to us. That's where you find Mr. Timothy will tell you, crash is going to crash definitely at 11,520. It's going to crash. How does it say that? How does it predict that? It's because it's a previous area of rejection. There's so much strength of the sellers here. It's an entry point for sellers. So there's so many crashes on this line, so that when now the price is approaching here, it definitely has to crash. Regardless that it had a pin bar from the upside, it was showing signs of going up, and it was indeed going up. But when it reaches an area of resistance, it has to crash. That is what you must know as a trader. Price will always test an area before it breaks it. It did the same thing here. Intention was to break, but it wasn't able to break the first time. It broke and then it rejected. And then it went up, and then the strength of this area pushed it down. Now, wow, it's able to break resistance. It always breaks it with the force. So this candle going down was very strong up until it closed in between. Now you can see it didn't close above this, because if it closed above this candle, then we are expecting this candle to go up and be green, because this is a reversal candle. So what am I saying to you guys? What I'm saying to you is that crashes, if you have an interest to trade like me, where I trade crashes, for instance, these crashes, I've traded them already. I've made money on these crashes. Why? Because I was able to notice this pin bar and to actually see that this is a reversal. I was telling you the other time that the pin bars are not the same. This pin bar is not the same as, excuse me, this pin bar is not the same as this pin bar. This pin bar may look the same on the design, but the meaning is not the same. This one formed on support. Because it formed on support, what is it telling us? It's telling us that the exhaustion when this head is smaller at the support line. Remember, we drew these lines before we started to trade. So you look at them and you use them. You don't change them. You use them where they are. So now what we find is that this pin bar, when it was forming, it was telling us that there is no strength for the sellers. So that's why we ended up with this green buy candle here, which also went up. And some people would have thought, oh no, we are on an uptrend, hold a buy. I am not yet sure about that, but I still don't hold a long trade. I don't hold long trades on these assets, because these reversals, they can set you off. But always when traders look at it, you always say, if you look at this pin bar on a very strong support, this pin bar showing you that the buyers are coming in, the exhaustion of the sellers, then you start going up. If you start a buy here and you close, but that is ideal. That is a situation of hypothesis, when you have not yet proven, when you are not really in the markets with your $100 trading this money. So you can't claim to me and say, if you hold from here, my take profits would be here. You can do that, but it's not what I'm teaching right now, because that is an advanced section of trading, when you actually know where the next resistance is going to be. You always use previous price to gauge the future price. So in this case here, we have pin bars. Today I want us to focus on the pin bars as our signals for entry. If we have a pin bar on resistance, let's check that. Here is a pin bar. Okay, this is a pin bar, but it is also what you call morning star or evening star. I'm not sure. I think it's evening star. So this is a reversal, strong reversal, a candle pattern, where you find that this small doji is in between, and then this red candle, almost an engulfing candle, is showing us strong sellers. Also here, we had a reversal pattern from here, and also this break, excuse me, this break of the supports by an engulfing candle, bearish candle, telling us that price is going down. So I want you to appreciate these movements, so that if this bearish candle here is closing now, the important part, if you are coming into the trade, you don't just trade the current candle. No, that is the wrong way to trade. To see this pin here and say it's going up and you enter with a buy, it's a wrong way to trade. You wait the close of the candle. Once the candle closes, it tells you where the next candle is going to end up. Okay? So this one, let's start with this one. This one closed above the support line. And then the following one, as much as it crashed, but it went and it ended up green. And when it was green, it was short green. It was not a strong green. So there was a lot of crashes up and down on this candle, this whole hour here. So that the pin at the top here is showing us that there is sellers in the market. And so it closed with this pin at the top, rejection. And then that's why then when it opened here, it crashed all the way down to this area here. And then it started pushing up and it closed above, normal, right on support, showing you strength of the buyers. So when it opened here, it started buying all the way up here. And so when it went up here, it sensed the strength of the actual trend here, and then it started crashing. So make the candles talk to you. Make sure that you understand that you can always, almost always, trade on this line with confidence. Whenever you put a sell on this line here, you can almost do it with confidence, knowing that it's going to crash. Let me show you here. You see this line here? I want to show you something. You see that in the line charts, the wicks are not accounted for. In the line charts, they account for the actual close and open of the price, okay? So the price closed here below the support. That's why we are having that candle talk to us. I still appreciate the fact if you can draw your lines on this line graph, even these peaks here, you can draw them. Even these peaks, because we are trading short term. Unless you want to go swing, there's a difference. You can swing these positions or you can close them interim. You make profits and you close. So when price reaches here, we are expecting some kind of a reaction, you see, because that is how these assets will always move. That is how these assets will always move. Okay, right. Now, let me end with a small modification of the strategy. Some people have seen me posting candles on my charts that I normally post almost naked charts like this. It's twofold. One is I like the candles like this, clean charts. Number two is that I'm always trying to divert the people who steal people's pictures. I don't mind you opening your own group. I don't mind you designing your own strategy, but design your own strategy. Don't take Mrs. Money's videos and sell them. Don't do that. Make your own videos from what Mrs. Money is saying. In other words, you are doing plagiarism, but at least on a notch of dignity, because you are making your own now, your own video, and you are selling it. Rather than to take my video as raw as it is and just say, I got Mrs. Money's videos, here, you can have $400, you see. So what we are actually doing here, we are empowering you as a trader so that you are able to appreciate trading and help other people as well. I want all of us to open groups. I want all of us to help people in our own communities. I want people in your own family to trade as well, end up trading as well, because you will teach them how to do it. You won't refer everyone to Mrs. Money, but you know that, okay, I have learned so much, and so I'm going to use the knowledge that I got. Okay, let's look at this. I'm not talking about patterns today. Please go look at patterns. These are patterns. This here, and this consolidation here is a pattern on its own. Look at how these candles are looking like. This is a pattern, which is very important for you to go and study the patterns and know that they show themselves a lot on the 1 minute time frame. On the 1 minute time frame, you will find lots and lots of patterns. You see, patterns that show reversal, patterns that show a continuation. I'm not there today. I don't have the time to talk about that. But what I want us to close with now is one indicator that you can insert to actually help you. Let me see which one. Oscillators. Let's use RSI. RSI somehow still is a very reliable indicator when it comes to overbought and oversold. RSI period 10 starts with that one. Levels 9, okay, levels 10. Description yellow is buy. And then levels 90. Description here is sell. And then you can add other levels. I'll show you how you do that. And then let's just say, okay. Right. Oh, my levels, my lines are not clear. Let me sort that out. Indicator list, RSI, properties. I want to change this line, make it solid, and a bit. Okay, better. So that now when price crosses here, okay, still, this is 1 minute. Okay, let me reduce this RSI. Okay, where are we? Indicator list. Some of the indicators will work better on, some of the parameters will work better on a mobile phone than on, this is closer, okay. What you do here, for instance, now crash is crashing. Simply do this. Where you see there's a lot of, remember the lines you were drawing when you were starting to trade. Now you draw these lines on the indicator itself. We are appreciating the fact that when it touches 90, it crashes. When it approaches 90, it crashes. But because it's now on a downtrend, the crashes are shorter at 73.96. So each time you see price going, for instance, the price went up to here on this candle, then it crashed. So if you already had this line drawn, you would have been already in a trade with a sell. As soon as you can see lots of price, say similar prices, for instance, what was happening this side is more of 90s, 90 here, 90 there, almost 90 there. So at least this is a different scenario. But here you can see that there is a common area of crashing. So that when price now approaches that area, it finds you ready with the sell. Let's look at that. This crash happened here, and this crash also happened here. So you would have been able to cash in just by using your indicator. A little bit above, but it crashed there. Also when price was touching there, it crashed there. So you can use this strategy as well to actually sell off the market. Let's check back. On a normal case scenario, how you use this, if you don't even know whether the price is trending higher or lower, what you do, because this is a crash, and what I say to my students is that Mrs. Money trades the spikes, I trade the crashes as they go down. So whenever it touches the 90 mark, I'm waiting with the sell order, and then it crashes. Okay. And then the other thing that you can learn from this indicator is to actually look at the way the crashes are happening. When the crashes are getting lower as well, you must check that out. It tells you a lot that the price is going to go down further. Okay, I'm running out of time, but I hope you can appreciate this thing I'm showing to you today. Two things. One, support and resistance on the charts on the 1 hour time frame. You can draw it, and then you can also draw supports and resistance on your indicators and use it to trade off. Mrs. Money going out. Thanking you so much, guys, for being with me now. I hope you will be able to use this a lot. I never checked the charts so far. There's no people asking any questions. We have run out of time. And I thank you so much for attending. If you've got any questions, we will be asking them in group. Thank you. Bye.